Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings. And I can't wait to spill the tea on an IPO that just went down like a lead balloon, or maybe it soared like a phoenix. Well, we will find out soon enough before we dive in if you love getting crystal clear insights from complex financial docu. Meant to make sure you hit that subscribe button and notifications so you never miss an analysis. We also have a really awesome community growing on Discord all about breaking down these filings together. Link is in the description below. Alright, so strap in because we are looking at Accession Corp, a company that just went public or had its initial public offering. And this report is basically their report card right after the big debut. So what is this company Accession Corp do? It sounds like a SPAC, a special purpose acquisition company. Their whole deal is to merge with or acquire another company. This specific filing is all about the juicy details of their IPO, which happened on the 4th of February of 2026. Now this IPO was pretty substantial. They sold a bunch of units, which are like a package deal. Each unit contained one Class A ordinary share and half of a redeemable warrant. Think of it like a starter pack for investors, offering both ownership and a future option to buy more stock. They managed to sell over 16 million of these units, even picking up some extra ones because the underwriters decided to buy more. This means they brought in a massive amount of money, over $168 million from selling these units alone. That is a lot of cash to kickstart their business venture. Now with any big money deal like this, there are a lot of agreements happening behind the scenes. They signed a bunch of papers that includes the underwriting agreement with their bankers Cohen and company capital markets and several other agreements that govern how everything will work. This is pretty standard stuff to make sure everyone knows the rules. They also have a warrant agreement, and this is key because it outlines the terms of those warrants we talked about. These warrants give the holders the right to buy more shares at a set price of $11.50 per S-share later down the line. Interestingly, alongside the main IPO, they had a private placement too. This means they sold more units directly to specific investors, like their sponsor Accession Holdings the LLC, and the underwriter themselves. These investors bought these private units at the same price as the public offering, but they came with certain restrictions like not being able to sell them right away. This is common to ensure stability after the IPO. They sold over 438,000 of these private units, raising another $4.3 million. This shows they have a solid group of early backers who believe in their plan. Now let's talk about the leadership team. They appointed some new directors, Manish Shah, Janine Yorio, Alan Wang, and Robert Henry. Having a strong board is crucial for guiding a company, especially one that is about to embark on a major acquisition or merger. As part of getting ready for this big step, they also updated their official company documents, their amended and restated memorandum, and articles of association. Basically, their company's constitution were put in place. This signals that they are fully ready to operate as a public company. The company also released a press statement on the 2nd of February announcing the pricing of their IPO. This is the official communication to the public and the market about the final details of their offering. Looking at the exhibits, you can see all the legal documents that make this whole thing happen. This includes the big underwriting agreement we mentioned, the warrant agreement, the letter agreements with initial shareholders and directors, the trust agreement for the IPO proceeds, and registration rights agreements. This is the backbone of their public operation. There is also an administrative services agreement with Accession Holdings II LLC. This suggests that the sponsor will continue to provide some operational support, which is pretty common for SPACs. And to wrap it up, we have the signatures from the folks in charge. Sumit Mehta, the chief executive officer, signed off on this report on the 6th of February 2026. So what is the big picture here? Accession Corp, the SU, has successfully completed its IPO, raising a substantial amount of money and setting up the groundwork for its future plans they've got. Their leadership team in place, their legal structures are updated, and they have a clear plan for how the proceeds will be managed. This is all about positioning themselves to make that next big move, that acquisition or merger from a high. Level view, this is a pretty standard SPAC IPO filing. It shows the company is moving through the process as expected. They've got the capital and the legal framework to pursue their acquisition strategy. The key risk here, as with any SPAC, is whether they will find a suitable target and successfully merge without losing value for shareholders. The success of Accession Corp 2 now hinges entirely on management's ability to execute their acquisition strategy and deliver value. What do you think about this SPAC's debut? Will they hit their targets, or will this be another cautionary tale? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and please subscribe for more deep dives into corporate finance. Don't forget to join our Discord community linked in the description below for even more exclusive content and discussions. Thanks for watching, and I'll see you in the next one.